The Fed made their big announcement yesterday that they are cutting the Fed funding rate by 0.5. And guys, the amount of people that I had call and text me and ask me, does that mean that mortgage rates are dropping a whole half a point? And the answer is no. The Fed rate is bank-to-bank lending. It's your car loans, it's your HELOCs, it's your student loans, it's credit cards. It's that sort of interest rate that is defined by the Fed. Now, a lot of people think that that means the Fed rate and the mortgage rate are 1-to-1, and that's just not true. The mortgage-backed securities in the bond market is what determines our mortgage rates. And back in July, when we heard that there might be a lowering of the Fed rate, there was a lot of movement in our market, and rates did drop pretty significantly, the lowest they've been in probably 3 years. And yet people still sat on the sidelines and said, well, I'm going to wait for the next drop. So all my clients got into contracts. They're able to get their negotiations. They're at a lower payment, a lower rate, and they're going to win. But guess what happened when the Fed made the announcement yesterday? Mortgage rates actually went up a little bit because the mortgage-backed security and the bond market said, ooh, that's a pretty big cut. We want to see how this is going to affect the economy. And so rates ticked up a little today. So know this, the Fed rate and the mortgage rates aren't the same. Rates are coming down. It's hopefully going to be cheaper to borrow money. But the more people who get in the market in the next 6 months with these lower rates means you've got that much more competition. You want to win? Call me. Let's get you into something now. And let me show you how to own a home regardless of where the rates are.